It's time for Global Insight, where we speak to experts from around the world on issues making headlines. Now, as the end of the year draws near, it's time for countries to start closing the books and review just how their economies have been faring throughout the second year of the COVID-19 pandemic. And despite the ongoing spread of the coronavirus and various global barriers to trade, it seems South Korea has been performing relatively strongly, becoming one of the world's 10 biggest economies earlier this year and is expected to record a historic high in export figures in the year of 2021. But there have also been some structural issues too, casting uncertainty for the future of the South Korean economy. We discuss South Korea's progress and prospects in its economic growth with Krishna Srinivasan, Deputy Director of the Asia Pacific Department at the International Monetary Fund. Very warm welcome to you. Thank you for joining us.
Good morning. Pleasure to be here.
Well, South Korea's economy, it grew 0.3% in the third quarter of this year, and that was actually a slowdown from the 0.8% growth seen in the second quarter. And this downward trend's been continuing throughout the year, actually, throughout 2021. But Korean policymakers, they seem to be staying quite optimistic, though, and they've projected a 4% growth for 2021, haven't they? But your organisation, the IMF, you've forecast 3.6%. So what's behind your estimate, and what's really the reason for this gap?
Again, it's a pleasure to be here. Just let me make one small correction regarding our forecast. You had mentioned a number of 3.6%. Now, this was from an earlier vintage of our forecast. If you look at our October World Economic Outlook forecast for real GDP growth for Korea, we had it at 4.3% in 2021 and 3.2% for 2022. And this projection is broadly similar to what the authorities have projected. Now, going back to your question, the economy has rebounded quite nicely, and economic activity is about pre-COVID levels. And I would attribute this to two key reasons. First, I would say effective containment of the pandemic. The COVID-19 situation has improved significantly, with case rates remaining low compared to most countries, and the authorities have recently met their target of vaccinating 70% of the population. Now, this has facilitated a greater reopening of the economy, allowing, among other things, the country to respond to the sharp uptake in external demand. The second reason, I would say, is macro policies have been proactive and very supportive. This includes a sizable fiscal impulse and very accommodative financial conditions. So what does this mean? So if you take these factors into account, then you say in the early part of the year, Korea's manufacturing exports were lifted by recovery in external demand. And as a result, private investment also continued to expand robustly, driven by the semiconductor and other tech sectors. In the second quarter, growth benefited from a rebound in consumption, which is also expected to contribute to growth in the fourth quarter, supported by the most recent supplementary budget. Now, you're right, activity did slow in Q3, partly owing to a tightening of social distancing measures and supply bottlenecks affecting auto production and sales. But the underlying momentum is pretty good, and we expect Korea's recovery to be pretty solid. But that said, let me just note that we will be revising our projection based on recent developments, taking into account what happened in Q3 and what happened in Q4. So we hope to put out newer numbers maybe in January. So let me stop there, just to conclude that as we see it, underlying momentum is still pretty good. And we expect growth to be pretty robust in Korea.
Right, and exports, they've certainly been quite robust. They did better than expected in the third quarter, but the numbers actually had dropped the quarter before in quarter two. So being a rather trade-dependent country, how should South Korea then safeguard its economy? Where do you see its potential?
So, I mean, let's abstract from quarterly movements in trade data. But if you abstract from that, it would be fair to say that trade continues to be a key driver of growth in Korea, including in the context of a recovery from the pandemic. Now, going forward, I think Korea has great potential to capitalize on the shift towards a greater digitalization of economic activity, given how well-developed high-tech industry is in Korea and a strong digital infrastructure in the country. And I would also note that Korea's response to the COVID-19 outbreak has also demonstrated potential in new areas such as medical and biotechnology sectors. And finally, I would say that the rising focus on climate change offers opportunities for the manufacturing sector to expand into areas of green technology. And if you put all this together and then you look at what the Korean New Deal already envisages, it has measures to help achieve greener growth, for investment in eco-friendly infrastructure, and promoting energy efficiency and renewable energy. So in this context, it will be key to foster private investment in the green economy, including through adequate carbon pricing to provide more robust incentives for the development and use of green technologies. And I would also note that to spur innovation and boost service sector productivity, the authorities could pursue a broader reform agenda to tackle some what I would call as long-standing rigidities in the economy. Now, what would some of those be? I would say you can think in terms of lowering legal barriers to entry and to lower startup costs, simplifying complex licensing and permit requirements, reviewing and adjusting regulations that inhibit the expansion of small and medium-term enterprises, and increasing the flexibility of employment regulations. So there are a number of reforms that could be undertaken to make the economy that much more dynamic to take advantage of a world we are moving into where there'll be a lot more role of digital technology, where Korea is well placed to take advantage of developments.
Right, it looks like we've got a rather rosy outlook there in terms of the potential opportunities that we could take advantage of. But it looks clear that it's going to take quite a lot of government spending, though, expenditure to really stabilise the situation in the country first after this whole COVID-19 pandemic. But, well, South Korea plans to spend a record 604.4 trillion won, which amounts to around $518 billion next year, and that's actually an 8% hike from this year's budget. And well, of course, to finance this huge price tag, the government's been hiking taxes at an unprecedented speed. Is this a sustainable financing plan?
That's a good question. Let me just make note that while spending in the 2022 budget is significantly higher than that in the original budget 2021, if you look at the second supplementary budget, the spending projections are broadly comparable. So in other words, if you look at what they plan to spend in 2022 in the budget, and you compare that with the second supplementary budget 2021, in nominal terms, spending is comparable, right? Now, if you take the budget numbers, the spending numbers as a share of GDP, then you actually see that spending would actually be more than 1% lower in 2022 than in 2021. And that will contribute to a lower fiscal deficit than what we had in 2021. Now, in terms of revenues, you said tax revenues have been buoyant. Yes, of course, tax revenue increase this year has been very buoyant, and that's largely related to what's happening in housing and stock markets, and some tax policy measures that were aimed primarily at stabilizing asset prices. For example, the comprehensive real estate holding tax for multiple homeowners, and a transfer tax on short-term capital gains. These are clearly measures, tax measures, but they were aimed at stabilizing asset prices. So if I were to see what were the bigger factors, it's the cyclical effect of what's happening in the housing and stock market, which boosted your revenues, rather than the outcome of tax hikes to finance budget spending. Now, again, you may ask, going forward, what does it mean? Now, as the housing market stabilizes, some of the gains in related tax revenues would not last, right? So then medium-term fiscal deficits are thus likely to be higher than what we saw in pre-pandemic and what we see now, which means that public debt would rise further to finance these deficits. So what that means is to put your debt on a more sustainable basis, you would require a broad slew of tax reforms to boost revenue mobilization. And this should include what I would call as longer-term fiscal needs owing to an aging population. So if you want to talk about what kind of reforms I have in mind, I would say things like broadening the tax base, reducing tax deductions on personal income tax and tax expenditures, and expansion of the VAT, possibly even the rate, which at 10% is relatively low. So the point I'm making here is, at this point in time, the fiscal this year seems pretty good. There's going to be a narrowing of the deficit. But going forward, these tax revenues which we see right now, which are because of what's happening in the stock market and the housing market, that may not continue. So you need broader fiscal reform down the road to make sure that the fiscal is sustainable.
Mm-hmm. And well, in terms of sustainability, the IMF, it's warned that the country's debt-to-GDP ratio is on the rise and expects it to climb to 53.2% this year and to 69.7% by 2026. How significant is this to actually pass this 50% threshold? Should it be raising alarm bells here?
Again, a very good question. Now, while public debt is expected to surpass 50% of GDP this year, right, and that you'll define the threshold, I think Korea's debt level is still low by high-income country standards, right? And so it is, in some sense, when you cross 50%, you cross the threshold. But again, if you put it in the context of what's happening in other high-income countries, Korea's debt level is still on the lower side. Now, that being said, as I mentioned previously, in the absence of fiscal adjustments down the road, public debt would be on an upward sloping path. Why is that? Because in addition to what's happening right now, you're going to see a lot of fiscal pressures from population aging. This would further accelerate your debt buildup. Now, in terms of population aging, you'll have to spend more on pensions, you'll have to spend more on health, and so on and so forth. So that spending is there down the pipeline. So to prevent debt from becoming unsustainable eventually, it's important to plan for a fiscal consolidation when the pandemic subsides. So right now, we're still in the midst of the pandemic. You want recovery to be fully entrenched. But then once the recovery is fully entrenched, you want to embark on fiscal consolidation. In this regard, I think the authorities have a plan of anchoring public finances with a rules-based fiscal framework, which is appropriate. One could consider fiscal consolidation, again, as I said, once the recovery is firmly entrenched, with the aim of stabilizing public debt over a well-defined time frame and at a level consistent with the fiscal rule. So I think that's something which you have to think about going forward. But I would say don't rush into fiscal consolidation. Wait for the recovery to be fully entrenched before you address the issue of sustainability down the road.
Well, staying on the issue of debt, household debt has also been soaring at an unprecedented speed. And, well, of course, this has been linked with the ever-rising property prices that you were just mentioning. In your view, why has the government's more than 24 rounds of real estate policies really failed to cool down these terrible housing prices?
Again, it's a very good question. And this is an issue on which the team back here in Washington is working quite closely. Now, if you look at the rise in house prices in Korea, it reflects a confluence of factors, not just one factor, but a confluence of factors. One is there's a shift in household formation with greater demand for housing by the population at large. Second, interest rates have been pretty low for quite some time. And third, housing demand has outstripped supply in Seoul, which has also pushed up prices in second-tier countries, second-tier cities. So it's a combination of these factors which has led to a sharp increase in house prices, not just in Seoul, but in other cities too. And we have different measures of how much prices are overvalued and so on. Now, in all fairness to the authorities, to the government, they have introduced and subsequently tightened a number of borrower-based macroprudential regulations. You can think in terms of debt to income, loan to value ratios on mortgage lending. And these have been, I would say, one could say, okay, despite all this, why are prices continue to rise, continue to increase? Again, it goes back to the three factors I mentioned before. But I would say that these policies which the government has pursued have been effective in the sense that they have contained the financial risks from growing household debt. I think that's very important because when debt becomes very high, you start worrying about financial stability and so on. And that's where these macroprudential measures have been very useful in safeguarding financial stability, right? Now, you could also note that despite all the rise in house prices and so on, there is very little by way of subprime lending, which has kept bank loan performing loans at a low rate. Now, that said, we cannot take comfort in what we have done, and so house price vulnerabilities need to be closely managed. And I think the government has the tools. If mortgage lending does not relent, you have macro potentials could be tightened further, particularly on unsecured lending. This is one aspect where there has been an increase in unsecured lending, and you could try to limit that. Second, you can push ahead with measures to ease housing supply via greater involvement of the private sector. I mean, you could do that, including through easing price caps on pre-construction apartment sales and easing regulatory requirements for housing redevelopments. So these are what I would call as reforms aimed directly at the housing market. But going back to why is housing demand so high in Korea, right? And that goes back to the issue that in Korea, social safety nets are not that adequate. So people see housing as a way to finance their retirement, right? And so going beyond the narrow policies aimed at housing, one could think in terms of broader reform measures aimed at addressing social safety nets so that people rely less on housing to finance their pension when they get old. I think this is something which we have seen in other countries, but the issue of adequacy of social safety nets is something which is quite germane to Korea, and those are kind of reforms which you also want to address down the road.
And really the adequacy of social safety nets, that's really put a huge question mark on the country's birth rate as well, the question of the country's future productivity. Now, the average birth rate in South Korea dropped to a fresh low of 0.84 last year, 0.84 child per woman, which is actually the world's lowest birth rate. Now, it's expected to decline even further to 0.73 by 2040, and that of course casts a very pessimistic outlook for the country's productivity. Now, it doesn't look like the current government has a short or long-term plan to boost these figures. What do you think is needed? What kind of innovation do you think can help overcome this demographic crisis?
All right. If I look at a question, there are two parts to your question. The first part about birth rates, and I would say, why are birth rates coming down so sharply? And the question I would ask is it related to the cost of childcare? Is it the cost of how to raise children? I mean, is it because of these costs that people avoid having children, right? So on this part, I would say that you could think in terms of public policies which are aimed at reducing childcare costs, including, say, through public finances supported child and daycare facilities. You could think in terms of greater generosity in maternity and paternity leave. So these are kind of reforms which have been tried in many other countries to address or to alleviate the cost of having children, which would promote an increase in birth rates and so on. Now let's take that aside. Now let's assume that the numbers are what they are, and how do we deal with it? Then I would say that over a period of time, this means that the Korean population is aging. Over the next few years, you'll be thinking in terms of spending pressures for health and pension, right? And these are going to be headwinds for long-term growth. So then you have to think in terms of productivity enhancing measures. Now, one, of course, is you can take measures to address the demographic headwinds by raising labor utilization, increasing participation of women in the labor force, right? Increasing, and some of the reform measures I talked to you in the past could also be aimed at increasing productivity. But increasing labor utilization is a very positive step. I would say that in this context, the human capital pillar added to the Korean New Deal is a welcome step to help adjust to post-COVID structural shifts by preparing workers for the job opportunities of the future and improving labor supply matching with demand to allow workers to shift quickly from stagnating to dynamic professions. Now, these and other training and employment policies should be implemented, to incentivize higher labor market participation and create sustainable private sector opportunities. I think in particular in Korea, I would say that because fiscal has been managed quite prudently, right? And debt levels compared to the other countries is still very low. You have the fiscal space to address some of these reform measures. So I think what this calls for is long-term fiscal planning to help diffuse these pressures in a gradual and sustainable way. And that's where I think the rules-based fiscal framework can help address these future spending needs and can also promote the kind of public policy measures I was talking about. And that will all come together to address the issue of how to deal with an aging population, how to deal with low birth rates, and how to increase productivity. So there's a confluence of policies we can think in terms of that.
Right, well, before we let you go, now with uncertainty surrounding the whole Omicron variant and the ongoing supply chain and energy crises around the world, what will Asia Pacific economies have to really brace themselves for?
So the Omicron variant just tells you that pandemic-related uncertainty is not behind us, right? Earlier we were worried about Delta, now we're worried about Omicron, but the bottom line is the uncertainty related to the pandemic continues to stay with us. So we have to think in terms of how to deal with downside risks to growth. How do we think in terms of policies? How the region has to think in terms of policies. How do we withdraw policy support? When do we withdraw policy support? And so on and so forth. And the second question you talked about is on energy prices. Again, one of the reasons why we see headline inflation rising across many countries in the world is because of an increase in import costs led by energy prices and so on, right? So there the question is, we think we at the IMF, we think that some of these inflationary pressures are temporary, transitory, and so on, led by high energy prices and supply disruptions, partly based on the pandemic. Then the question is, what if these inflationary pressures are not transitory? Then how do we deal with that? So that's the other set of issues that to worry about. On the one hand, how do you deal with downside risks to growth because of the pandemic and other uncertainties? On the other hand, what do we do if inflation is not transitory, but actually more permanent? How do we deal with that? So these are the kind of these are the kind of issues you have to deal with, which when you think in terms of uncertainty from the pandemic, the Omicron variant, and supply chain bottlenecks.
I see. Well, that was Krishna Srinivasan, Deputy Director of the Asia Pacific Department at the International Monetary Fund. Thank you very much for your time.
Thank you so much.